When it comes to Social Security, seniors and disability beneficiaries always want one thing above all: clarity about their payments. That's why in this video, we're diving straight into the September 2025 Social Security payment schedule. Not only will I walk you through the exact dates when your benefits should hit your bank account, but I'll also explain why some beneficiaries will receive 2 checks this cycle. And it doesn't stop there. Many of you have been asking whether there's any hope for another Social Security increase this year. After reviewing what's moving through Congress, I've found multiple opportunities that could bring you real money in your pocket. I also know many of you felt let down by the big beautiful bill, especially since half of seniors were left out of its increased provisions. That disappointment has led to even more questions about whether help is still coming in 2025. The good news is that there are several bills in motion right now, and each of them could change things dramatically for beneficiaries. So, whether you're on SSI, SSDI, or retirement benefits, stay tuned. The payment schedule and the legislative updates we'll cover today could directly affect your finances. The Social Security Administration issues payments based on the day of your birth. If you're receiving retirement benefits, your exact payday is tied to which third of the month your birthday falls in. For September 2025, the breakdown is very clear. Those born between the 1st and the 10th will see their payments arrive on September 10th. Those with birthdays between the 11th and 20th will receive theirs on September 17th. And those born on the 21st or later will get paid on September 24th. These dates are slightly shifted compared to 2024, so even longtime beneficiaries should pay attention to the new calendar. For SSI, the rules are slightly different. SSI payments are usually deposited on the 1st of each month. However, if the 1st falls on a weekend or a federal holiday, the payment is sent the business day before. This small rule often creates situations where recipients receive what feels like an extra check. That can be confusing, but it's important to understand that it isn't a bonus, it's just an early deposit for the upcoming month. Knowing these rules helps prevent stress when you see 2 deposits close together. September 1st, 2025 falls on Labor Day, which is a federal holiday. Because of this, SSI benefits for September will actually be paid out on August 29th. That means SSI recipients received 2 payments in August, one on August 29th and one on August 30th. August 1st for that month's benefits, and another on August 29th, which counts as the September payment. This is why some people may feel like they got 2 checks, but in reality, it's just a scheduling adjustment by the SSA. This pattern happens regularly whenever the 1st of the month lands on a weekend or holiday. For seniors living on fixed incomes, it's critical to plan carefully so that money received at the end of August lasts through September. Without proper budgeting, you might end up short toward the end of the following month. So while it may feel like a bonus, it's really just a timing shift you should keep in mind when planning your bills and groceries. Some SSDI recipients also receive payments on the 3rd of each month, and this applies to specific groups of beneficiaries. For example, individuals who began collecting Social Security before 1997, people who qualify for both SSI and Social Security, those whose Medicare premiums are paid for by their state, and those who live abroad fall into this category. These rules were created to standardize payment timing and prevent overlap with other programs. This distinction is important because not everyone fits neatly into the birthday-based schedule. If you're in one of these groups, the 3rd of the month remains your payment date regardless of your birth date. For September 2025, that means you should receive your benefits on September 3rd. Knowing which group you belong to helps you avoid confusion and lets you verify whether your payment is on time or not. Sometimes payments don't show up when expected, and this can cause panic for seniors who rely on every dollar. The SSA advises waiting at least 2 business days after your scheduled payment date before contacting them. This waiting period accounts for common issues like bank delays or federal holidays. If, after that time, the money still isn't there, then it's time to call the Social Security Administration directly. It's also important to recognize that a missing payment could signal an overpayment issue. In recent years, the SSA has been stepping up efforts to reclaim billions of dollars in overpaid benefits. If you owe money back to the program, the agency may withhold part, or in some cases all, of your benefits until the balance is recovered. This is why understanding overpayments and responding to letters promptly is essential. Overpayments occur when the SSA sends you more money than you are actually entitled to. This could happen due to paperwork errors, unreported income, or benefits continuing when they should have stopped. When overpayments are discovered, the SSA is legally required to collect the excess funds. For retirees and SSDI recipients, this usually means 50% of your check can be withheld each month. For SSI recipients, the withholding rate is typically 10% of your monthly benefit. One recent case highlighted a 23-year-old who received a demand for $14,000 in overpayments, even though they had never filed for benefits directly. In their situation, payments were mistakenly issued under a parent's record and not stopped in time. This kind of mistake can linger for years before being caught, which is why many people receive unexpected bills later in life. With the SSA estimating over 2 million Americans facing these situations and a government push to collect more than $23 billion in overpayments, ignoring these letters is not an option. If you get one, deal with it immediately to prevent your benefits from being withheld. Many seniors are still upset that the big, beautiful bill left about half of recipients without an increase. The good news is that multiple pieces of legislation are currently under discussion in Congress that could change this. While not every bill will pass, several realistic opportunities exist for meaningful increases this year. Seniors should be aware of these proposals because they may directly affect benefit checks later in 2025. By understanding these bills, you'll be able to recognize which ones are most likely to pass and how they could impact your household budget. More importantly, you can share your concerns with your representatives and encourage them to support the legislation that truly helps seniors. When Congress hears from voters directly, it increases the pressure to move bills forward instead of letting them stall in committee. One of the most promising opportunities is the $600 tariff rebate supported by President Trump and introduced by Senator Josh Hawley. This plan would provide checks to working Americans and Social Security beneficiaries, modeled after the 2020 stimulus checks. Each adult and dependent child would qualify for $600, meaning a family of 4 could see as much as $2,400. The critical detail here is eligibility. Just like in 2020, Social Security and disability recipients would be included, even if they don't file taxes. This ensures that vulnerable seniors aren't excluded from relief. Given that tariff revenue has been higher than expected, this rebate plan has solid financial backing. If passed, it would provide quick, direct support to households struggling with inflation. The Social Security Expansion Act, filed in the 119th Congress, is another major proposal with significant potential. It includes 3 major benefits for seniors. First, it would provide a $2,400 annual increase for all current and future beneficiaries. This means that every senior, regardless of income level, would receive more support on a yearly basis. Second, the act would specifically target those on the lowest benefits by boosting them to 125% of the federal poverty line. For many seniors, this equates to at least a $660 monthly increase, raising yearly benefits to around $19,560. Finally, the bill proposes reforming the way cost of living adjustments are calculated. By tying increases to the actual expenses seniors face, such as healthcare and housing, the new formula would ensure annual raises that more accurately reflect reality. Legislation doesn't move on its own. Public pressure is often the deciding factor. Seniors who want these increases to pass need to reach out to their senators and representatives, mentioning bills by name, such as the Social Security Expansion Act or the Tariff Rebate Plan, ensures that lawmakers know which policies matter most to their constituents. This kind of advocacy is especially important because Congress is juggling many issues, from foreign aid to tax reform. If seniors don't speak up, Social Security may fall further down the priority list. By raising your voice, writing letters, and even calling your representative's office, you can play a direct role in helping these bills move forward. Remember, politicians respond most strongly when voters demand action. To wrap things up, here's what you need to remember. The September 2025 payment schedule is set, with SSI recipients seeing an early payment on August 29th due to Labor Day. Some groups will get their checks on September 3rd, while others will follow the birth date schedule of September 10th, 17th, or 24th. And while payments are reliable, overpayments and collection efforts remain a real risk. Always read and respond to SSA letters to avoid benefit interruptions. On the brighter side, multiple bills in Congress, including the $600 tariff rebate and the Social Security Expansion Act, could bring real increases to seniors this year. That's why staying informed and engaged is so important. If you found this breakdown helpful, hit the like button, subscribe to Social Security Post. Together, we can make sure seniors' voices are heard and their needs prioritized in Washington.